If you died tomorrow, your bank account would freeze. Not eventually, not after some long process, almost immediately. Your spouse, your adult kids, the people who depend on that money for the mortgage, for groceries, for the funeral home that's calling for payment within days, none of them could touch it. Not because they're not entitled to it, not because there's some dispute, but because the bank's computer system sees a death certificate and locks the account, full stop, until a court says otherwise. And here's the part that surprises almost everyone watching this. There is a free, one-page form that can prevent this entirely. It takes maybe 10 minutes to fill out. Most people have never heard of it. Most banks won't bring it up unless you ask. And by the time most families learn it exists, it's already too late. They're sitting in a probate court waiting room, instead of simply withdrawing the money they need. I want you to picture something for a moment. A husband and wife have been married 41 years. They've done everything right. They have a will. They've talked about their wishes. They love each other and they trust each other completely. Then one morning, the husband doesn't wake up. In the middle of arranging a funeral, grieving, and trying to keep her bearings, the wife goes to the bank to pay for the service, and she's told the account is frozen. Her name isn't on it the way she thought. The will doesn't matter yet, because wills have to go through probate first, and probate can take months. She's locked out of money that, in every meaningful sense, was always theirs. That's not a rare horror story. That happens to ordinary families every single day in this country, and it's almost always preventable. Before we go any further, I want to be completely clear about something, because this matters and I take it seriously. I'm not an attorney, and I'm not a financial advisor. I'm an educator. What I'm sharing with you today is general information to help you understand how these things typically work, and to give you the right questions to bring to a licensed professional in your own state. Estate laws are not the same everywhere. Banking rules, probate procedures, and the exact paperwork involved can vary quite a bit depending on where you live. So please think of this video as a starting point for a conversation with a licensed estate planning attorney or your bank, not as personalized legal advice. With that said, let's talk about why this matters so much right now and what you can actually do about it. Here's why this hits people especially hard today. More families than ever are managing money digitally, with direct deposits, automatic bill pay, and a single household account that covers everything from the mortgage to medications. When that account freezes, it isn't just an inconvenience. It can mean missed payments, late fees, and real financial stress landing on a grieving family at the worst possible moment. And the form I'm going to walk you through today addresses exactly that gap. It's sometimes called a payable on death designation, or in some states, a transfer on death designation. It is not a complicated legal instrument. It's not a trust. It doesn't require an attorney to draft it, although talking to one is never a bad idea. In most cases, it's a form your own bank already has sitting in a drawer or available online, and you can usually complete it the same day. By the end of this video, you're going to understand exactly what happens to a bank account when someone passes away, why that account locks up even when there's a will, what this free form actually does, and how it sidesteps probate, who should consider using it, the mistakes people commonly make when they try to set this up, and the simple steps to actually get it done this week, not someday. If any of this feels like something your own family needs to hear, go ahead and subscribe, because we cover topics like this, practical, plain English estate planning, every week. And these are exactly the kinds of conversations that protect the people you love most. Let's start with the foundational piece. Why does a bank account freeze at death in the first place? It feels almost cruel, doesn't it? The money is right there. The bank can see it. And yet the moment the bank is notified of a death, usually through a death certificate, sometimes through a family member calling in, sometimes through an obituary or a government database, it has a legal obligation to stop activity on that account. The reason is actually rooted in protecting everyone involved, even though it rarely feels that way to a grieving family. A bank account that belongs solely to the person who died is now, legally speaking, part of that person's estate. And an estate isn't just whatever the spouse or kids think is fair. An estate has rules. It may have debts that need to be paid first, credit cards, medical bills, taxes. It may have multiple heirs who each have a legal claim. The bank has no way of sorting any of that out on its own, and frankly, it's not supposed to. So instead, the account freezes, and the matter typically gets routed to probate court, where a judge oversees the orderly transfer of those assets according to the will, or according to state law if there's no will at all. Probate, for those unfamiliar with the term, is simply the court-supervised process of validating a will, paying off legitimate debts, and distributing what's left to the right people. In many states, that process can take anywhere from a few months to well over a year, depending on how complicated the estate is and how busy the local courts are. During that entire window, assets that are solely in the deceased person's name, including that frozen bank account, are generally locked. Now, here's the important nuance. This is true even if you have a will. A lot of people assume that having a will means everything transfers smoothly and immediately. It doesn't. A will is simply a set of instructions for the probate court. It still has to go through the process. The will tells the court what you wanted, but the court still has to confirm it, supervise it, and authorize each step. That's a completely different thing from money that's already designed to bypass probate entirely, which is exactly what a properly filed beneficiary designation does. This is where that one-page form comes in, and I want to walk through it carefully because the terminology can be a little confusing depending on what state you're in and what kind of account you have. For a regular checking or savings account, this is usually called a Payable on Death designation, often abbreviated POD. For things like investment accounts, brokerage accounts, and in some states even vehicle titles or real estate, the equivalent is often called Transfer on Death, abbreviated TOD. The underlying idea is the same in both cases. You go to your bank, or in the case of investment accounts, your brokerage firm, and you name a specific person, or sometimes more than one person, as the designated beneficiary of that account. You're not giving them access to the money while you're alive. They can't withdraw a dime, they can't see your statements, they have no rights to that account whatsoever until you pass away. The moment you pass away, though, something powerful happens. That account essentially bypasses probate entirely. The named beneficiary simply brings a death certificate and valid identification to the bank, and in most cases, within days, not months, the funds are released directly to them. Let me say that distinction one more time, because it's the whole point of this video. A will has to go through probate. A payable on death or transfer on death designation does not. It operates outside the probate process because legally, the moment you pass away, that account's ownership automatically transfers to the named beneficiary by contract, not by court order. It's one of the simplest, most underused tools in basic estate planning, and the fact that it's free and takes minutes to set up is exactly why I wanted to make this video. Let me give you a picture of how this plays out in real life, using an illustrative example, not a real family, just a composite scenario that reflects what financial counselors and attorneys see again and again. Imagine a woman in her late 70s, recently widowed, who lives independently and has one adult daughter she's close with. She has a single checking account that holds her Social Security deposits and covers her monthly bills. She always assumed that because her daughter helps her manage her finances and has her debit card for groceries, everything would simply transfer to her daughter when the time came. But being an authorized user on a card is not the same as being a co-owner of the account, and it's definitely not the same as a death beneficiary. When this woman eventually passes away, her daughter discovers that the account is frozen the moment she reports the death. There's a small life insurance policy and a modest amount of savings that the daughter desperately needs to cover funeral costs and to keep paying her mother's final medical bills. But none of it is accessible. She has to open a probate case in her mother's home state, which involves filing fees, sometimes attorney fees, and a waiting period that, in her state, ends up taking about 7 months. Now compare that to a different version of the same story. If that mother had simply walked into her bank, filled out a payable on death form naming her daughter, and updated it whenever needed, her daughter could have walked in with a death certificate and had access to those funds within a matter of days. Same family, same love, same intentions, completely different outcome, just because of one piece of paperwork. Now let's talk about who this is really for, because I don't want you to think this is only relevant to people with complicated finances. If you have any individual bank account, meaning an account that's only in your name, not jointly held with a spouse, this applies to you. Joint accounts work a little differently because when one joint owner passes away, the surviving owner typically retains full access through what's called rights of survivorship in most states. But the moment you're talking about an account held in just one person's name, that account is vulnerable to a freeze unless a payable on death designation is in place. This is especially relevant for widows and widowers who, after a spouse passes, often end up with accounts solely in their own name for the first time in decades. It's relevant for single adults of any age. It's relevant for retirees who've consolidated their finances into one or two main accounts. And it's relevant for anyone who wants their family to avoid the added stress, cost, and delay of probate for at least their liquid cash, even if other parts of their estate, like a house, still need more comprehensive planning. It's worth pointing out too that this tool works hand in hand with other estate planning tools. It doesn't replace them. Some people use a revocable living trust for their larger assets, like real estate or significant investment portfolios, and use payable on death and transfer on death designations specifically for their everyday bank and brokerage accounts, because it's simpler and doesn't require funding a trust. Others rely on these designations as their primary protection if their estate is relatively modest and a full trust feels like overkill. There's no single right answer for everyone, which is exactly why a conversation with a licensed estate planning attorney in your state is so valuable. They can look at your full financial picture and tell you which combination of tools actually fits your situation. Let's move into the third core area, because filling out the form correctly matters just as much as filling it out at all. The first step is simply contacting your bank, your credit union, or your brokerage firm, and asking specifically for a payable on death form, or a transfer on death form if it's an investment account. Some institutions handle this entirely online through their banking portal now. Others still want you to come into a branch or submit something in writing, and policies do vary by institution as well as by state, so don't assume that what worked for a friend at one bank works identically at yours. The form itself usually asks for the full legal name of your designated beneficiary, their date of birth, sometimes their social security number, and their relationship to you. You can typically name more than one beneficiary and specify what percentage each one receives, and you can typically name a contingent or backup beneficiary in case your first choice passes away before you do. Once it's filed, the bank attaches that designation directly to the account, and you don't need a lawyer to witness it, you don't need it notarized in most states, and there's typically no fee at all. One thing I want to highlight because it trips people up constantly is that you can change or update this designation anytime you want, as many times as you want, simply by filing a new form. If your circumstances change, a divorce, a falling out, a beneficiary who passes away before you, a new grandchild you want to include, you are never locked into your original choice. This is very different from something like an irrevocable trust, where changes can be far more difficult. A payable on death designation stays flexible for as long as you're alive and competent to manage your own affairs. Now let's talk honestly about the mistakes and myths that trip families up, because this is where good intentions quietly fall apart. The first myth is the one I already mentioned. People assume their will automatically covers everything, including their bank accounts, and that nothing needs to be done separately. In reality, a beneficiary designation on a bank account typically overrides what's written in your will. If your will says your account goes to your son, but your payable on death form names your daughter, the bank will follow the payable on death form, not the will. That mismatch causes real conflict in families, and it's almost always accidental, not intentional. The second common mistake is forgetting to update the form after a major life event. Someone names a spouse as their beneficiary, that marriage ends, and years later the ex-spouse is technically still entitled to that account because the paperwork was never updated. The third mistake is assuming that being a joint account holder and being a payable on death beneficiary are the same thing. They're not, and they have very different legal implications, including different protections from each owner's individual creditors. The fourth mistake is thinking this form alone is enough estate planning. It is a powerful, simple tool, but it generally only covers the specific account it's attached to. It does nothing for your house, your car, your personal belongings, or any other accounts that don't have a designation filed. And finally, some people worry that naming a beneficiary on the account gives that person any rights or access while the account owner is alive. It does not. The beneficiary has zero control, zero visibility, and zero claim to the funds until the account owner passes away. It is purely a future transfer instruction. So what should you actually do this week if this resonates with you? Start by making a simple list of every individual bank account, credit union account, and brokerage account you hold solely in your own name. For each one, contact the institution and ask directly, do you offer payable on death or transfer on death designations, and how do I add one? Most representatives are very familiar with this request, even if it isn't something they bring up proactively. Fill out the form for each account, double-checking the legal name and details of your chosen beneficiary, and consider naming a contingent beneficiary as a backup. If you have more than one account, decide thoughtfully whether you want the same beneficiary across all of them, or whether you want to divide things differently, for instance, naming different children on different accounts, if that better reflects your wishes. Keep a personal record, somewhere safe and known to your family, listing which accounts have these designations and who's named, so nothing gets overlooked. And finally, bring this list to a licensed estate planning attorney, even briefly, so they can confirm it fits properly alongside your will, any trust you may have, and the rest of your overall plan. This single step doesn't replace a complete estate plan, but it closes one of the most common and painful gaps families fall into. At the heart of all of this is something pretty simple. You've worked your whole life to build what you have, and the people you love shouldn't have to fight a bureaucratic system just to access money that was always meant for them, especially while they're grieving you. A frozen bank account doesn't make anyone wait out of malice. It's just the default outcome when nothing else has been specified. But you get to specify it. You get to be the one who quietly removes that obstacle, long before anyone needs to think about it, simply by filling out a form your bank already has ready and waiting. That's the kind of planning that doesn't show up in a dramatic way. Nobody throws a party because you filed a payable on death form, but somewhere down the road, when your family needs that money fast and it's simply there for them, they'll feel the difference, even if they never fully understand why it was so easy. If this video helped make something clearer for you, do me a favor and subscribe, and consider sharing it with a parent, a spouse, or an adult child who might need to hear this too. Estate planning isn't about being morbid or dwelling on the worst. It's one of the most loving, practical things you can do for the people who'll be left holding the pieces. As always, everything in this video is general education, not legal advice. Estate laws and banking procedures vary from state to state and from institution to institution, so before you make any decisions, talk to a licensed estate planning attorney in your state and check directly with your bank or brokerage about their specific payable on death or transfer on death process. Thanks so much for watching, and I'll see you in the next one.